Hello, everybody. How's everybody doing? David, sun is shining, birds are chirping. It's a good morning outdoors. It's a good morning to not watch the markets. Good morning, Sterling. Good morning, Patrick. Good morning, Jake the Snake. Good morning, John. Good morning, Harold. Good morning, Harold. My clicky finger wasn't working. How is everyone doing this fine Friday morning? End of tariff week. Good morning, Daniel. Is everybody having fun yet? Oh, it's going to start watching for a capitulation bottom, which means we could get a little rip your face off bounce. Good morning, Heinrich. Good morning, Jake. It doesn't have to happen today. I mean, we got Powell speaking today, though. We got Powell speaking, so thanks for putting in the payroll information, Sterling. Wait for some more people to come in. McRanger's good morning question mark. Well, I guess every day above ground is a good day. You got to find the positive. Good morning, Eric. And Trump just tweeted out, we're all going to be richer. We're all going to be richer. And China, 34% tariff retaliation. So, MJ, good morning. So, we shall see. We shall see. I had the unemployment rate ticking up, rounding up. Again, it was a rounding up to 4.2. It prior was 4.14. This came in at 4.15, but reported on rounding basis of 4.2 on the headline number. What else do we got going on? We're waiting for some more people to come in here. So, I mean, that's not a big tick up. The prior numbers, unemployment non-farm payroll numbers, we came in at 228 this month, and this was for March. And Trump touting that number. Above consensus at 135. The last was 140, revised down to 116 or something. Good morning, Ted. So that's where we stand. But again, hey, if you have good unemployment and prices are still holding or rising, Fed can't cut. But look at what this is pricing in now. Still only a 57% chance that it pauses in May, and then 1, 2, 3, 4, 5 cuts by December now. So that's what the market is pricing in. Like the Fed's just going to say, okay. And that would mean that none of these tariffs are inflationary at all. I know Jim and Bob disagree with me. I think they can have inflation expectations across the board, especially with retaliations and everything else. Now we'll have to see how it all shakes out. But even if prices hold firm, we stick at this upper 2s or 3% inflation before that was present before tariffs. Now, if the economy falls off a cliff, yeah, we're going to get some deflation, disinflation. No, you're not going to see iPhones start selling for $3,500. You're not going to see that. I'm not going to comment on my thoughts on Wedbush. So where do we sit now? We have Powell speaking at 11:25 Eastern, so that's going to be very key. Again, this is not a market you can sleep in. This is not because anything can come out during the day. Trump can say stuff. You get reciprocal tariffs. You can get tariffs pulled off. Who knows? But I'm going to tell you one thing. When we get these kind of downward price actions, we will get rip your face off bounces. This is a great time. If you have the charts, go back and study. Go back and study prior declines. And I'm not talking the COVID ones. I'm talking, the declines from 2008, especially the declines from .com. Because these markets are getting a little cheaper. Look, your multiples are back to 33, 32, but they're nowhere near cheap. I mean, I'd like to see the Schiller PE back below 20, which means the markets could have to, and if we don't have expanding earnings, if we have earnings pressure, your multiples and multiple contraction, you could see still more downside. But in the midst of that, you'll get rip your face off rallies. So far, pretty red this morning. Pretty red. And patterns for rip your face off rallies, they're generally will get something V-shaped, and then it's just a momentum play. It's a momentum play. In terms of our groups, let me refresh this. Utilities, down the least, but everything else is negative. Consumer cyclical, financial, basic materials, technology, all close to down to 3%. We already looked at the Fed Watch Fear and Greed Index and extreme fear. And we already looked at Schiller PE. So, yesterday we finished the double top of how many people contacted me and said that was never going to happen. Today, we had a spike low. Remember, we also yesterday closed below the 62.5. We had a spike low down to 87.5. My initial target area was this, as we discussed on futures, as 53.30, which we're trading just below now. And then we spiked down to the 87.5, which was my secondary target area. Now, longer term, because at some point we will get, whether it's today, whether it's next week, we'll get a pretty substantial bounce. Look at all the overhead resistance. So even if we wiped out the last 2 days, even if we fill the gap, okay, from Wednesday to Thursday, you're still below the 200, you're still below the declining 50. And you're right around the area of major resistance now. So keep that in mind. And in order, look at where the 62.5 is based off these spike lows. Look at the 62.5 on the retracement levels, 58.08. So remember 5,800. This market would have to bounce and then start closing above 5,800 before we shift the probabilities again back to retesting the potential highs. That is a lot of heavy lifting to do. What did I miss now? Let me see. Let me see what some comments are. Hold on. Let's see. Mike, could you discuss how managed short position on the daily time frame for the S&P now that the weekly double has completed? Well, I'd be in trailing mode. I'd be in more aggressive trailing mode down here since we also ticked off the 87.5. What I'd be looking for personally is if we start making a momentum base and the VIX starts dropping, then I'd start unwinding shorts to look to reestablish them at a higher level. Okay? That's what I'd be looking for right now based off this price action. I mean, we could easily retest this low area, but we're coming in. Dude, this is where you don't want to get greedy for shorts. We're coming into a key area. Even if we roll over again, let's say we roll over after the open. Let's say Powell says, we're on pause, and the market doesn't like it. Look where, from these lows in October 23 to the most recent highs, look where the 50% harmonic is. Look where the spike lows from July are, okay, of 24. You coming in, there is major support zone down here. And even if we broke through that, before I could get substantially okay, we're going to have major problems. We got the 62.5 now. So I'm watching for some kind of bottoming formation or V-shaped reversal down here. Did it happen already? Don't know that. Don't know that. Really have to assess this after the open, after we have the cash open. Okay? But I'm going to be watching for some kind of bottoming formation. If it doesn't happen today, early next week. We got a lot of key support area, and nothing goes straight down forever. And you still get the bottom pickers in this market. There's not enough now. That's why I don't know if this is going to be a long-term bottom. I don't think it is. I think we're going to get rip your face off rise over because it's C, and then we're getting rollover plays. Unless, now, this is the caveat. We got the Trump factor. Oh, if he all of a sudden says, you know what, I've negotiated the best deal ever and we're removing the tariffs. I've renegotiated everything with the world. We're dropping our tariffs in half again. And you blah, blah, blah. Who knows what he's going to say? It's Trump. So, I'll get to some others. NASDAQ. Again, we're back below. I had this key area. We spiked below. We also completed the 87.5 in the NASDAQ. So if I dial this back, if I bring this back farther and change the color of this, bring this back. Look at where those we already spiked through. We're in the major support zone. Let me take off this level real quick just so you can see it. Let me take off this and this. So the 50% harmonic from the lows in October to here, we're between the 50 and 62 and a half. We also spiked down to a very key level right here. Your August low areas. You had the spike through there, but then catching on the 200, and we spiked down there today. So this is the major key support zone from a harmonic level on the NASDAQ. So I'll be watching for, again, for the bottoming or a bounce formation in here. I'll reiterate, though, bounce only for me for the time being. Why? Because look at all the overhead resistance. Look at all the overhead resistance. And again, if we were coming the other way, in order to tip the probabilities, look at this major prior breakdown level coming in, this 20,700. We'd have to get back above there on a rip your face off rally before this would shift back to probability wise continued higher prices. Everything prior to that would be a rollover, especially even a rally back to 20,125 area. Could just be a bounce, and everybody be celebrating that like the worst is over, and it could roll over again. Or we need to form a more substantial bottoming formation, which is not a V spike in this. Unless Powell comes in and says, we're going to do emergency cuts, we're cutting 50 basis points today, then that would change things, because then you'd see a continued, even bigger rip your face off rally. The Dow, today looks like it's going to close below the 62.5 unless we get that rip your face off rally. The Dow still has more downside potential based off of the double top. But we've easily hit the first and second targets in there. So that's where we sit there. And then if we're going to complete the 87.5 rule on the Dow, we're still at 38,434. The Russell still to complete its 62.5 rule still can possibly drop to 1743. All right, keep that in mind too. Which would be back to where this would be a very key long-term low base. So I'm going to be watching for that to unfold. Also, the VIX pulling back after the spike to 45.56, pulling back a bit today, at least going into the open. So going to keep watching this. If it starts retreating, we'll be watching for more of the sustained bounce. Again, the two things, the big thing today is where Powell mixes in here. The DAX, from the lows in November of last year to the highs in March, we came right down to the 62.5 and bouncing up again here. Again, a key support zone. Now I'll be watching again for another rollover play in the DAX also, because you have the cross of the rotation zone, you have the hooking over 50, and I'm really going to be focused on this 20,000 level over the next few weeks for the DAX. By the way, the note futures, which did trigger the head and shoulders, we've been looking at the micro yield, but the note futures did hit the first target. The yields have not hit the first target. Okay? But again, on any bounce, I'm watching for rollover plays still in the yields. So that's going to be something if you're looking for bounces and you have, again, resumptive sell patterns, then the probabilities say we could roll back over and easily retest the lows from September. The dollar index also completed its 87.5 rule. Remember, it closed below the 62.5 back in March. Back at the beginning of March, and completed the 87.5 and is coming into a very key support level. So far, this is a channeling correction. So we might see another push lower still. We'll have to see. especially going into next week, but it's coming into very key support. Crude getting shellacked off of like a global economic slowdown. By the way, any bounce play now is 65 as key resistance on there. What's interesting is Trump wants all the producers to drill, baby, drill. If they start drilling and massively expanding their oil operations at this, they won't be profitable. So that's the conundrum now with oil prices getting down here. Now, if we continue down, we're looking at roughly 59.75 and then major harmonic areas about 55 if this does continue lower over the next few weeks. But there could be a pretty substantial floor put in here at some point. Gold still. Some of this will get liquidated, especially with losses and if we get more margin calls today. Going to be still watching for the secondary bounce up, but we could be making a more substantial topping pattern over the next few days / weeks in gold. We do not know yet. Until then, the trend is still up on the medium to longer term and then cautious on the short term. Silver getting shellacked. Also, by the way, keep an eye on silver. After not being able to sustain above 35, we do have a double top pattern in play. So I'm going to be watching this 29.15 area over the next few weeks. Copper also pulling back after the last run up. Drastic. I mean, everything's pricing in a very substantial slowdown. Could be watching for a bounce pattern in here. There is nothing fantastic yet. Again, there's not a lot of fantastic setups just yet going into the open. They might unfold today, but there's not going in the open. The yen easily closing below the 62.5 yesterday. So still on any bounce play in the yen, going to be watching for a return to the 87.5. And remember when things blew up in September blew up between the August and the lows in September with unwinding more of the carry trade, which some got put back on. So we could see some more interesting stuff from that getting unwound. The euro completing the 87.5 and coming into major topping area. It's going to be watching for a possible pullback in the euro now, but there's no great topping pattern. There isn't any great topping pattern just yet. Spiders. Again, this we'd have to look 523, 524 right now. I think this hit this 87.5 pre-market. So, yeah, see it hit the 87.5 pre-market. So technically on a pre-market basis, that is checked off, just like the futures hit that. Okay? So the key on any bounce, again, we're in uncharted territory. Key support is right around this 523 area. If it did drop through there, the next support, by the way, there's still a gap technically left behind in the spiders back from on August 5th. So there's still a magnet gap price of 517.38, not today, unless we really crash, but over the next while. Very key resistance is now back at 549. The minor resistance area is, I'll use the old prior projection harmonic at 533.80 to 536. The Qs also ticked off the 87.5 in the pre-market. Okay, so that's where we sit there. The very key resistance in the Qs now, we're looking at about 450. 450 is very key resistance. Again, I just wait till this opens and use your harmonics once it opens. Let's see. Bitcoin, which has held up remarkably well, but there's no great pattern in here. We still have the double to play out. What else? Can we take a peek at Apple weekly double top and XLF potential double top that may trigger today? Apple. There's one. Oh, wrong side. Wrong one. So there's your pattern for Apple. Gapping below the first target, 199. So again, over the next bit, I'd still be watching. I talked about this a while ago, where I was expecting Apple to reconnect with its weekly 200, and look where the target is on that. So, and look where the 87.5 is. It looks today, unless Apple stages a massive rally, like it'll close below the 62.5 also. So I'd be continuing to look for rollover plays. You will get strong bounces at some point. But again, I'd be watching for rollover plays in Apple. XLF, there's your double right there. Okay. Going to close below unless we get a massive rally below 47.04. It's definitely going to be confirmed today. Looks like it'll probably get triggered. And then you could easily see your targets. Look at this prior key breakout area from before is your final target. And even if you wanted to get more aggressive on that, it's still, look where you're, if it kept going and you shifted to your other thing, you're just below right here, this key reversal bar. So I'm still using on this one, structuring it with the conservative target. So there you go, MJ. That concept of rip your face off rallies as a secondary move was what I was asking. Well, secondary bounces and rip your face off rallies are two different things. Okay? I'm not watching now for a secondary bounce in like the S&P. I'm watching for a bounce, but it would not be a secondary bounce because a secondary bounce defines a bigger pattern. If I was watching for a secondary play in the S&P, it would be a rollover. Once we start getting the bounce, it would be the next rollover. That will tell me a lot. Once we get a bounce, whether we do or not, if we get a V shape, which is generally, how some of these form after capitulation bottoms, then we sort of get a pause, which is my secondary reaction. Now in gold's a different story. This is looking the secondary reaction. We'll see on the next bounce. If we cannot sustain a lot of the move, either can't get above the 62.5 retracement or can't make a double or stall at a double top and then trigger the double top, that's taught me a lot about gold. So for the S&P perspective, a secondary reaction now would be if we bounce and then the next rollover move down is a secondary reaction. Yeah, there are still a lot of double tops in stocks that are not played out. Now we'll probably get some bounces before then, but there's lots of still downward price action that can still happen. Don't know if it's tradable, but there's a triggered 5-minute inverse. I'm not. What I'd be more interested in is if it's breaking above about this 53.15 into the open, into the overnight or the pre-market clear path move. And then I'd be looking for a target if we do get more of a rip your face off rally about 53.81. Hello, Charles. Why silver going down and gold still holding? Silver also has more industrial components, and just like copper's major, but everything's pricing in a slowdown, and gold is still a flight to safety trade. Tesla, PMG. Tesla right now, little gap down, but I'm still watching this same thing I talked about yesterday, this 250 level. Now, Tesla's not getting crushed like the rest of the market. So if we start getting a market rally, then I'm still watching this 285 level for a potential breakout short term. Other than that, it's range bound between 250 and roughly 285. Hey, Stafford, how are you doing today? Thank you for tuning in. All right. Let's just see. We got 1 minute to the open. So let's just see where the tick opens today. And then I got to jump. Let's see. What do we have? Oh, we still have like 30 seconds before we go. Let's just peek in at the short-term NASDAQ. Again, the short-term NASDAQ, same thing. If you start really getting momentum above 18,255, we could get the more substantial bounce play. Another thing, if we do sell off, based off these bounces, I will be looking for, especially to pull back between the 50 and 62.5 if we get some negative price action straight into the open on both the S&P and NASDAQ. Okay, that's what I will be focused on this morning. There's your opening print. Where's our tick? Where'd the tick go? All right, minus 1,500. So that is actually pretty much, we could see some capitulation levels coming off of that. So I'm going to be watching the tick bounce to see what the market bounces with the tick bounce, and then on the next rollover play to see if critical support levels hold. But that is a very weak tick opening. So let's just see on a rollover place like in the S&P, if we can't really substantially break through this 53.15 area, then I'll be watching to see if we hold the kind of 50% pullback. Now, we're going to get a market bounce with the tick bounce, but then I'm going to be watching to see what happens with that. I have to run now. Thank you for everyone for tuning in. Again, great questions today, and don't be silly. It's also a Friday, and if you've been playing any, I remember weeks ago I talked about putting on potential volatility hedges when the VIX was cheap again. If you've done that, I would not get greedy with them. I would not get greedy and at least look to take something off because the VIX is so elevated now. With that, I will talk to everyone later. Bye for now.